Mish, how are you?
I'm good. Can you hear and see me?
Yeah,
We
got
can.
both.
Okay, great. Good morning, Blake. Good morning, Dale. Good morning, everyone.
Hi, hi, Amish. Thank you,
Good
Blake.
morning. You're welcome.
Thank you, buddy. So, Mish, why don't we just address the? Oh, also, Blake, you know that Mish is on CNBC now. She's
Well, no,
broken into.
let's correct that. Asia.
Uh,
I'm
oh,
very,
Asia.
I'm
Yeah,
very
yeah.
popular in Asia. Yeah, for
Very
sure.
awesome.
All
Yes,
right, that's still
yes.
cool. I think you should be international anyway. So your intermarket relation work is great. So I'm interested in what you think shutdown is going to mean to the markets. Do you think, people have looked at it and there's been little impact, but things seem different every day now. Could this be more negative to, just the stability of the markets with this going on and President Trump using it as an excuse to be laying off a lot of people?
Well, I hate to get into the political foray
Oh,
because,
yeah, I
as
do too.
right, I
But
mean,
but
there's reasons
yeah,
why suggested. I saw today JD Vance is now blaming the Democrats. So, you know,
right.
it doesn't matter really. We've been at this crossroads so many times with a government shutdown looming. It's actually happened a couple of times. And as we
Yeah,
know, it usually gets resolved. This is a different world, though we're in right now. So we don't
that's what I
know.
mean.
Yeah, I
Yeah,
don't know how long it will take to get resolved. It will eventually get resolved because what we do know is people get really, really, I mean, people get upset about social injustices and violence and all the other,
I know where you're going. They don't
but
get upset about anything more than money.
exactly. And once it starts to impact people's wallets, or something horrible happens because, in a state park, there's no rangers or, something like
Yeah,
that. And a tourist gets mauled or, whatever it is, we don't really know. But what we do know is obviously, well, one could actually argue that the government has sort of been shut down already. And I have,
good.
you know what I
That's a good perspective.
mean? So it's just really more of the same, except exaggerated. And I think what I read that I resonated with me was about the paying down the debt when the government is shut down, because that goes away too, in terms of being able to do that. And of course, we know that that's right now screaming is the debt. And
Yeah,
so
yeah,
I think that's where I'm going to focus. I heard, the discussion on bonds, and obviously you have to watch the bonds, not because whether we think the Fed's going to lower rates or not, but really more about how the relationships flip. We've been in a risk-on situation with the
yeah,
long bonds versus the junk bonds versus the S&P for so
yeah.
long. And I think that,
Eternity.
yeah, eternity, exactly. And so does that change? I mean, at this point, it would have to be something pretty outrageous. So we'll see. We'll see.
Yeah,
There was so many. I love Blake calling me the biggest silver bull. I mean, I've been bullish silver since $20. So here at
yeah,
46, $47, maybe I curtail in terms of the upside in a degree because there is resistance, but longer term, I I actually still believe with everything we just talked about that there's almost like a little chaotic underpinning that would where the metals could really react inflationary. And I love my trifecta of inflation. So I think I like to look at it like a trader. So silver gold ratio, right? We're hovering
yeah.
around 80. If that ratio breaks 80, that really means not only silver can continue to go up, doesn't mean gold goes down, but it means that silver starts to accelerate. That's inflationary. The dollar, this bounce that we had in the dollar, I would call it a meager bounce. However, we do legitimately have some level of a double bottom. If we go back to the levels we saw in July and then
Right.
September, as we're getting into
Yeah,
October. But if that low breaks, the dollar will go lower. And thirdly, of course, is my sugar barometer, which is interesting because sugar right now is holding. You know, if you look at
Yeah.
the March sugar contract, you want to look at it at around 16.35. If it starts to get back over 17 cents, you know, now we're talking about a whole new sea change of a hyperinflation, which would be a normal reaction in essence to tariffs. I mean, now we have tariffs on wood, so that could be inflationary for wood prices. You know, we saw the supply problems we're seeing with copper. Obviously, we know that the precious metals, along with now some of the industrials, platinum and palladium, have gone up. The things that haven't really participated have been a lot of the grain, the agriculturals. But, you know,
Yeah, but do you think that they've begun, Michelle? I was going to ask you about that because corn bottomed a few months ago. It's been a decent rally too. Yeah, and I know any market can, get a rally out of the hole with short covering and all of that. And the rubber meets the road if we have a correction and we put in a higher low, kind of like what natural gas is trying to do. And you and I
are
talked about
bullish.
yeah. So,
I listened to I read the transcript of your interview with Maggie Lake. And so, you know, I thought that
there it
was,
is.
yeah. Well,
So,
yeah,
yeah,
exactly. Well, we're long natural gas. I mean,
yeah,
obviously we always play with stops, so it's not like we sit there to hold forever. But, you know, we're talking, right. I think two things is one, you have to watch DBA, and that's huge because if it gets back over 27.10, you know, is it because of coffee? Is it because of corn? You know, we don't really know. Is it because of the softs, like I mentioned, sugar?
yeah,
But, you know, to me, the big thing that's really holding back a hyperinflation scenario is oil. And I read
yeah,
today, forget about natural gas. That definitely to me looks like it's bottoming out. I don't know where it's going to go. There's a lot of gas that can be released. When I say that, it sounds funny. But when we look at oil, we just had some negative stories for oil. Number one is now OPEC Plus is saying they're going to release 500,000 barrels a day every month. And there's another Trump story because we
yeah,
know that when he went to Saudi Arabia, he shook their hands. Basically, the deal was you keep those oil prices down. So, and I'll do whatever you guys need. I'll send billions of dollars or whatever. I mean, he was very transparent about it. And so if oil stays cheap, that's one thing.
yeah,
If in
yeah,
the face of all this talk of OPEC plus, you know, you talk to somebody like Josh Young, who also was on Maggie's show, he thinks that this is just a house of cards and that demand is much greater than people anticipate, and supply is not nearly as big as being reported because the Permian Basin and a lot of other air producers are not producing oil at these low levels. So we'll see. But I can tell you that if you put all those things together, rising gold, rising silver, rising other types of commodities, the tariffs, then grocery prices, even though we're not seeing them in the futures, are at 2025 highs. Recently, that statistic came out. Consumer
yeah.
confidence going down, the dollar potentially, and anything that ignites geopolitically maybe could be the thing that ignites the oil market. The picture changes.
Exactly. Everyone's been talking about a recession and debating because of weak employment numbers. But I learned from Mark Chandler that, and you could probably tell me if you agree, that every major recession starts with an oil shock.
Exactly. And you know, you can have recession and inflation at the same
Yeah,
time.
that's what
People
we
don't
have.
realize that. I mean, the biggest argument people tell me is that we're going into deflation because we're going into potential recession. And I'm
Yeah,
like, I don't think I don't see deflation at this point. And I could make the case potentially for recession based on what you're saying. So that's why we look at our modern family. You love my segue to the modern family.
Okay, I'd like to see it because we are at an interesting juncture, having made new highs, and I saw you talking about the Russell and the potential triple top. You're warning your subscribers about. I get your emails, Mish,
Oh,
and I
and
read them.
volatility was the one I
Yeah,
wrote
yeah,
yesterday.
yeah. So
That
you must think that there's a chance that even the S&Ps can correct.
And there's always a chance. We know that it's been growth stocks that have really been the big leaders. But we also know that there's been stories there too. Not that there's any doubt in anyone's mind that we're in an AI world, and that will continue to blossom as time goes on. And I could tell you that some of the technology that we're using right now, which I can't really talk about, but it's fresh out of the box, and it has to do with Google. So Google is really at the forefront in terms of AI when it comes to multimedia. The whole film and movie industry is changing. All people that are making movies right now, if they don't go to AI, they're left behind. And Google's at the top of creating the technology for that, for the software for that. So just want to mention, I'm not bearish AI, but with that said, I heard it suggested that all these announcements like NVIDIA and Intel and advanced micro devices.
Yeah, giving each other money. I think it's happened before, right?
Yeah, exactly. And that is not new revenue. That's money being circulated. So,
It's crazy.
It's a different story than what we saw before, where revenues were just increasing and increasing and increasing.
Yeah.
So I don't know, but let's look at the Modern Family. How about we do that?
Let's do that. So the bottom of the screen is a green share.
It's interesting because when you and I have talked for, oh my God, so many years. And I always feel so relaxed when I come on the show. And I was actually a little nervous this morning. And I realized it's not me nervous about what I'm going to say. I'm just nervous right now. I think there's an anxiety that has to be recognized. And speculators have come in like gangbusters. I think I read mom and pop retail investors have donated $23 billion into the markets right now. So you've got a lot of people that are
all in.
Comfortably numb.
Love that tune.
Yeah, yeah, right. So should I share my screen?
Yeah, go ahead. It's a little green button. And you know what, Mish, I appreciate you sharing that feeling because, we're all supposed to be at times, oh, everything's okay. I have faith. I know everything's going to turn out okay. It's all good. And I have the same feeling. It's like this undertone of anxiety, being bombarded by things that we're not used to. And
we're not used to, right? I mean, and I don't even want to get in. I mean, let's just say the closest thing to home for us is, when you hear about the mass shootings. It's so hard as a human being to not have a level of compassion for the families of people that are impacted by that. And it's too much. But and that makes me nervous.
All right, I'll get political. There are too many guns in America.
Well,
okay? I'm political. All right.
I saw a chart yesterday of gun deaths so far this year, and the United States was like some countries were zero. They
don't have guns.
They don't have guns, right? So gun control actually there is a correlation. But I don't want to go into that.
I know. Yeah, people want to hunt.
Right, because
don't hunt people.
Well, the thing is I also know a lot of very liberal people. I try to stay very much in the middle because you can't be a traitor and have a major bent one way or another. But I know very many political left-leaning people who are also buying guns for different reasons. So, whatever.
I know. Okay.
These are the things that make me nervous, make me lose sleep at night. All right, but let's go to the charts. So this is grandpa, right? So this is a daily chart right now. And you can see, we made a new high over here. We did have a reversal in that when you make a new all-time high, and then the next day you close below the low of the day you made the high, that's considered to be a reversal. And so in that reversal, generally you look at something at about 5 to 10% in terms of a normal correction. So if that was, let's call it 247, a 10% would be $25, which would put us really basically right near or maybe even under the 50-day moving average. That's kind of the worst case. But we don't know that yet But if we look at the weekly chart, what I found so interesting is that we have first week, second week, third week, 4 weeks in a row where we made slightly higher lows. And so if you look at the low of last week, 237.55, just from a pure technical standpoint, anticipating a correction, I think would be if we break down under this 237.55, that's where we could start looking at what I was talking about at around 225 as a first initial target, which would be a 10% correction from the high, which actually would be kind of a normal correction.
Yeah, be healthy.
It would be healthy. Anything beyond that, not so healthy. So before I jump around to the rest, here's the one that actually I think is so interesting because nobody thinks about this. This is KRE. So, you can see
the banks.
The banks and commercial real estate tied to these banks, right?
Yeah.
So we hear a lot about home prices and housing and prices being too expensive and mortgage rates still being too high. But I haven't heard a lot of buzz about the commercial real estate. So when I looked at KRE on a daily basis, look where it's sitting, right on the 50-day moving average. And if you go back March 2023, KRE was sort of the silent killer in that it rolled over and broke down before everything else did. And then we had that massive correction. It was like about a 20% correction. Whether it turned out to be a great buy opportunity at this point is irrelevant. What is more relevant is that I always say to people, if you listen to the young traders, they're telling you, you just keep buying the dip, you just keep buying the deep, don't worry about a 20% correction, and market always goes back up. But a lot of people can't afford to take a 20, 30, or 40% hit to their portfolio. So my warning to people is, if you start to see these things roll over, you have to anticipate there'll be a much bigger correction. And it's perfectly okay, especially in this universe where it's so easy to buy and sell stocks at a whim, to take some profit or put in some stops, sit through it, and then get back in. I mean, that's been my formula for my entire life, basically, of trading. So keep an eye on this. Doesn't mean it's going to happen, but you can see how close we are right here. It doesn't look so negative, but if you go down here, not only is it massively underperforming the SPY, but momentum is still okay. So this is not like, oh my God, doom and gloom. This is just, hey, keep your eyes open, right? And then the retail is another one. Even though everybody was celebrating Granny Retail's new highs for the year, in 2021, the high in XRT, which I love because of the consumer discretionary and staples, was 104. So while S&P and NASDAQ and all these other areas have gone to new all-time highs, the consumer is in the game, but I wouldn't exactly call thriving in the game. So again, underperforming the SPY, momentum is still okay, pretty far from the 50, but just watch for rollovers in these inside sectors. And since we're talking inside sectors, let's look at IYT, because I read that
transports.
Yeah, freight has been down a lot, 12.5% year over year in terms of freight traffic. IYT is not really reflecting it, probably because of stocks like Uber. By the way, we used Uber Eats for the first time ever last night, which was pretty awesome. But we haven't gotten through the July high. We're just about trying to match last week's high yesterday, but now, of course, I think everything's coming in lower. So all of these things, but it is outperforming the SPY. So this is probably the most positive thing. If transportation keeps going, you can't get too negative, because it basically would tell me that the reshoring is working to a degree and that things are moving in the United States. But, that's just a suggestion, because we need other evidence besides this. And of course, let's look at sister semiconductors.
Yeah.
Now, this could be, we've seen these before a million times. We've talked about topping action. This could be topping action yesterday. I haven't seen where it's coming in right now this morning. But again, you want to watch for some kind of a close today under yesterday's low, 322.47. Remember that 5 to 10% formula that I told you about with the Russells of a correction. And just be prepared, which means you're not buying up here. You're waiting, maybe protecting yourself, maybe putting in stops. So that's kind of how I'm looking at the big macro right here as extended. We have fundamentals that could support a correction. If it happens, don't ignore it. That's all. 5-10% healthy. Beyond that, now it could hurt.
Are you addressing traders or investors?
Oh,
Both. Okay, so I mean, investors too can be thinking about protecting themselves from what the market isn't expecting.
absolutely. I know that, like I said, I always like to use NVIDIA as the classic. When NVIDIA was trading over 200, everybody was piling in. When it went to 180, they were saying buy the dip. Then it went to 160, buy the dip. And then it went all the way down to like
90.
140, and then 90. And I'm thinking to myself, these people are down 50, 60% in their portfolio. Did that feel good? Long-term investors. Now, of course, we can say, oh, well, NVIDIA is back up to 180. It wasn't so bad. But what if the one day that doesn't happen? Or it takes a year for it to happen? That's why I like to, I care. So,
Yeah.
yeah, I mean, we have always been more active investors. There are times when I can kick myself that I didn't buy something and hold it forever. And then there are
Yeah.
times where I say, thank God I didn't. So to me, I rather just get back into something. So that's just me. So I think that's the fair warning. But let's take a look at some commodities too, because
You can't expect perfection at the crap table.
exactly. And you don't want this to be a crap table. So here's some of the futures numbers coming in right now. You can see the
I
market
do.
barely down, right?
Yeah.
So the VIX is up though. That's sort of double bottomed a little bit. So here's your dollar down slightly. Oil obviously getting a little bit of a hit here this morning because of this massive story about OPEC plus and also peace in the Middle East. We could certainly argue how sustainable that is. But natural gas is looking pretty good this morning. And let's look at gold. I mean, there's been a lot of people trying to pick a top in gold, and it's very hard to pick a top in gold. But you can see if you look at the gold chart here, this is the December contract. If this again turns out to be, I was looking at 3,800 to 4,000, so I'm happy. I have my trailing stops. If this turns out to be some kind of a correction, where would it go? I think if it can get anywhere near 3,650 to 3,700, that's a gift at this point in this volatile time. So that's one thing. And if we go down to silver, 47, I was looking at like 45, so it even surpassed my target, which is why I don't get out. I just use more trailing stops. But you see how yesterday it made a high and then, 2 days ago it made a high and then yesterday it closed. Well, this is today actually. It's starting to take out the low of yesterday being 46.27. A close under 46.27 again. Maybe we could go back down to 42.50, 43.
Sure.
That doesn't mean the bull is over. It just means, like everything else, and commodities are volatile. These are not companies. These are commodities. It could have a correction, but unless the fundamentals seriously change, I think that that's still a long-term bull. Like I said, though, I'm a trader, not necessarily a buy and holder, although I have been a buy and holder in silver and gold for a long time, and that's worked out great. So yeah, that's kind of where I'm at with all of that. I wanted to show you sugar because it's unchanged right now. So even silver and gold going down doesn't bother me. What matters to me more is the silver to gold ratio, as we talked about. And I said the dollar, obviously breaking the lows would not be good. Here's the sugar chart. So here we are. We had a nice little bottoming here, but it wasn't really confirmed. It's not a strong bottoming formation because the next day, I like to see a close above the high of the day before. That didn't happen, but it doesn't necessarily mean anything. Right now, we're having inside yesterday's range, and I think so the sugar market could be interesting to keep an eye on. That's another one. So if that gets through the 50-day moving average, looks like 1677. We've been there before, but again, a couple of closes above, I would take another probe potentially. I'm looking at that. And if we go back to
You'd have some real nice divergence between those two lows.
exactly. And if we go back to my charts here and go up and we look at DBA, that's what I wanted to show. DBA has been kind of a very volatile stock, or I should say ETF. But you can also see that we have a golden cross. The prices are sitting right on it. The momentum is sitting right on the 50 as well. Not great momentum. But if we get through these levels, I'm looking at like 27.10. If we get through 27.10, you got a really cheap risk down to under the moving averages to see maybe that makes a move. And the other one that's been consolidating forever, even though oil is a factor in this, is DBC. I don't know if it's really going to do too much here. Let's look at a weekly chart on DBC. If we look at the weekly chart, you can see the massive level of consolidation really between 21 and 24. So that's another range to keep an eye on right there. And that's actually, momentum-wise, not doing unbelievable, but okay. Been underperforming the SPY for a while. So, these are the things that I'm watching right now. I think you need to have about 15-20% in cash right here just to be able.
How about cannabis? That's a commodity.
Oh yeah, well,
and that's been acting great.
What have we said, Dale? I know you and I have talked about this. It wasn't a question of if, it was a question of when, and when is happening. He supposedly talked about that video about the cannabinoids in your system. I've been taking CBD oil every day as a vitamin forever. For somebody like me, I can't live without my cannabinoids in terms of I'm not talking THC, I'm talking CBD.
Yeah, right.
I do believe it's very, very healthy, especially as you get older. And here we are, we're not quite where we could be, but if he makes any kind of announcement, we'll get there. We look at the history of MSOS. If you go back to 2021, it was trading up here at 56, and it's at 5. I mean, that just show you how much upside this thing has.
Yeah, I'm glad we wrapped on that.
Yeah.
It was a buzz. You know what? It was a buzz talking to you today, Mish.
It was a buzz. Hey, listen, if everybody was stoned, we'd probably have a nice
I don't see a lot of those people going out and getting into fights.
Well,
anyway.
Robin Williams had the classic line about everybody building the atomic bombs, but the Jamaicans are building the atomic bongs. And, I always thought that was the funniest routine, basically, like how chill everybody was.
Yeah. Well, I mean, you gave us so many great looks and ideas today, Mish. And, it's always great to know what you're thinking and kind of line it up with some of the things that I'm looking at. And, I think that you're one of the better, not just an analyst. It's easy to make a market call. You're a trader. So you make the call, you make the trade, and the hardest part is having the hold, to be able to hold.
Right.
And you're able to do it. It's not easy.
It's not easy. And, this is one of my little pet peeves is a lot of people who go on media and talk about, it's the same stocks over and over. I mean, there's a list of 10 growth stocks that everybody has been pushing. And some of them have skin in the game, but a lot of them do not. And I actually have always had skin in the game. And so this is my career. So, I know what it feels like to watch your equity go down a lot. And in the beginning of the year, I had a rough start and I've come back tremendously. But now, forget it. I am like into super tight. I'm not letting my equity go back down again more than the normal fluctuation because it hurt. And I'd rather sit out and be in cash and relax and get in. We kind of know when it's time to get back in because you start to see the bottoming signs, the volume, the reversals and patterns, all of that. Like, for example, here I shut off my chart, but when MSOS bottomed back in April, like everything else, it tried that bottom again, never happened, and then boom. I mean, it's not obviously done what other stocks have done, but this is something now that we know is probably going to go much higher.
Yeah. So, it's a great story. I tell people that, when people come in, they say, well, they're searching for the secret. for trading. And there is no secret, it's hard work. And like even throughout your career, you go through periods you have to live through adversity and then be resilient.
You can't
And
possibly become a better trader if you don't learn how to lose money, but you have to
yeah,
learn how to lose money in a controlled fashion. And
yeah,
this year, a lot of people feel very smart because all you had to do was buy the hot stock that X was touting and you
right.
make money. It was like easy money, but we know that that doesn't always last. And I mean,
Yeah.
I think the last thing I really want to say is, the idea of the super cycle in commodities, we already have seen it in the metals, is a very real possibility. We can talk about the fundamental reasons again, but we don't have to. But that's kind of where I have my eyes right now. And like I said, oil might be the X factor, but we'll see how long that lasts.
And Mish recognizes it because you cut your teeth and began your career in a similar environment. So it's like deja vu on steroids, isn't it?
Yeah, well, when I was on CNBC the other night, the one of the anchors was like, "I remember in October 1987, when we had the crash. I was, I think she was British. I was in high school, and I was, the teacher came in and said, 'Oh, Wall Street's crashing,' and I thought, 'Oh, what's the pop chart on the that pop song that's on the charts?' And I'm like, I was actually, and I said to them on CNBC, I was on the floor on October
Yeah.
1987. I remember it well. Now, of course, it turned out to be a great buy opportunity like they usually are. The question is how many people are wiped out along the way.
I left my office and went to the went to the bank to see if it was still open, Mish. They laughed at me. Anyway,
Uh,
okay. Anyway, follow Mish at Market Minute on X, and you want to show your website so people know. And
oh, I
you,
stopped
you
sharing.
could at the minimum you could sign up for to check it out, and then
All
go
right,
through her paywall. But
that's
she's one
good.
of you're listening to a veteran and someone that has you're still standing after all this time
And I and
and
I,
doing
I
okay.
right,
Huh?
and I'm still, I mean, I won't do this forever, but I'm still very active. This is the website. I'm still very, very active in terms of teaching and talking. That's
Yeah.
not going to last forever, but I absolutely feel passionate about trying to help people. I mean, here was my article yesterday that wrote, "Is it time to watch volatility?" Like,
Yeah.
duh. So, yeah, I mean, at this point, I'm still committed to helping people in the traditional way. And so might as well take advantage of it while I'm still doing it.
You're also a watchman for a lot of people. So some of the things that you say and make people aware of are not trade specific, but you speak to the environment we're in, and you have to have been through several different environments to recognize it. So thanks for being a watchman for all of us on FinTwit, Mish.
Oh, thank you, dear. Thank you so much. And thank you've always been such a great friend and supporter, and Blake. So I
Yeah.
really appreciate that so much. Thank you.
All right. Love you, Mish. Follow her. Follow her on X. She's one of
All
the
right.
best intermarket relationship people I know. And don't just count your charts, count your blessings. And I'll see everyone tomorrow. There you go. Adios, everyone. Thanks again, Mish.
Thank you so much.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.